Welcome to another episode of the CPA Advisory Show. I'm Jeremy Wells, and with me as always is my co-host, Chris Hervishon. Chris, how you doing today?
Never better. How are you, Jeremy?
I am doing well, thanks, and I am excited as always to have another guest on our show. Today we have Rachel Fisch. Rachel, I'm going to turn it over to you, let you introduce yourself to our audience, tell us a little bit about what you're working on.
Sure. Yeah. So my name is Rachel Fisch. I am a Canadian. I feel like one of the few Canadians that's allowed into tax Twitter, hashtag tax Twitter. And I was probably just a stalker there for a while and wanted to feel like part of the gang. So 6 weeks ago, I purchased a firm called Realty Tax. It wasn't just to get into tax Twitter, but I definitely do feel more like validated. Like it's okay, guys. My firm has tax in the title. I'm allowed to be here. And so, yeah, purchased that about 6 weeks ago from the two original founders. So having lots of fun. Oh, gosh. Process, technology. Just had my first new hire start yesterday. So lots of stuff going on there. And I've already also been really busy lately with some partner stuff. So working with John Ray of Scrutinize, working with Matt Wilkinson and the team at BizInc. Yeah, lots of fun stuff going on.
Awesome. We have had a guest from the UK. I think you are our first Canadian, though.
That's
right,
awesome.
Chris?
I think that's right.
Yeah.
So welcome.
Thank you.
Breaking new ground.
Well, this is kind of one of those questions where you ask somebody, how are things on when it's different from what you know, but what they know is different from what you know, and so it's not really a fair comparison. But
Yeah.
I have to ask, what's it like being an accountant in Canada, and what, if anything, do you know is different about that than being an accountant down here in the U.S.? And that's probably enough to fill hours of show, but I don't know.
Right there. Because actually, I just a couple of weeks ago. CPB Canada is our Certified Professional Bookkeepers of Canada Association. And we just had our national conference a couple of weeks ago. And one of my sessions was on exactly that. I did a 90-minute session on the difference between Canada and the US. And we talked about market size. We talked about the profession itself, like the CPA, the accounting, and the bookkeeping profession. And then we talked a little bit about the actual work and how some priorities are different. And of course, the technology that goes with all that. So, I mean, I could just give you like my 90-minute spiel, like right now. High level, though, what I would say is that Canada is much closer to the way that the UK and Australia works. In terms of tax-wise, our government, of course, like we're all members of the Commonwealth, and so are very similarly structured. The U.S., although the largest, is probably the most complex and the most not structured like anything else. And so sometimes being attached to the north end of you guys is a little challenging because we're like, hey guys, can we get that technology too? It's like, no, because we've got different taxes, we've got different payrolls. So stuff like that. So there's always, I think generally speaking, like to speak on some high level, first of all of our provinces, like we don't have the whole state thing in terms of how they're governed. So, I mean, in the US, it's literally like having 50 different countries all attached to each other. And so in the US, we're a little bit more interprovincial friendly. When it comes to, let's see what else. We have like federal tax, and then we have provincial taxes. And that's it when it comes to like income tax and sales tax and stuff like that. We don't have kind of the municipal and the county and the all of that stuff. What was it? I think that Canada has about a dozen tax jurisdictions, and the US has over 13,000.
Yeah, I was just looking that stat up because you say 50 different states, and I'm like, well, then you throw in all of the counties and the communities and all, and even, I had one client where they lived in Kansas City, which has a city tax, and there's no joint filing, and it was a married couple. and they have one filing for normal employment income and another filing for business income. So for one married couple living in Kansas City, I think I had to file like 8 or 9 different returns for them every year.
Well, and isn't Kansas City like between two states? So there's Kansas
Well,
City,
that
Kansas,
was
and
part
Kansas
of it
City,
too.
Missouri.
That was part of it too. They had a return for Missouri and a return for Kansas. So
Oh
it
gosh.
was a nice it was a little bit of a PETA client there, but
Yeah. So I would say that generally speaking, it's thought that our tax systems are more simple than yours. The part where we kind of get not screwed with technology, where it is not our friend, is because in the US, there isn't usually like a per transaction, like recoverable tax. And so, as I was talking about the federal portion and the provincial portion, part of that is considered a VAT, and which is what much of Europe has. Again, the UK and Australia has value added tax. So yes, we claim it, like we charge it on income, but then we can claim it back on expenses and then net out the difference. And that is something that's completely unheard of in the US. But then we also have some provinces that have that and a regular tax that's just an expense tax. And so trying to work with technology companies that do require that transaction level tax coding is usually a bit of a pain.
So Rachel, these differences between the US and Canada, we have to
Yeah.
ask, is CAS a thing in Canada, or is that just strictly a US thing?
CAS isn't a thing. Like, honestly, I didn't hear about it. I think we even had a thread, like, I'm sure Jason Stott started it probably because he's a little disturber, but about like CAS. And I was like, I would only call it CAS if I was pitching a speaking spot for AICPA. Like, there isn't, people don't normally talk about this. So here's what I figured. And it's one of the first things actually I went on to work with Jason for his roundtables, and we've got roundtables on CAS. And so basically what we discovered was that this is a bunch of CPAs who mainly, right, are educated and deliver audit assurance and tax services, teaching them how to do full cycle accounting and advisory services, which is actually something that if you are looking to round out your team, bookkeepers know really well how to handle multiple client engagements at the same time with multiple deadlines. This is something that we've been doing forever. Again, Canada has a great bookkeeping program. And then your IMAs, your industry accountants, your CFOs, the ones who are actually working in industry are going to understand full cycle accounting and departmental accounting far more than, in my opinion, your audit and tax CPAs. And so to me, sure, this is a new concept to that organization or being able to roll it out. But if you're rolling it out only with audit and tax trained CPAs and you're missing, the bookkeeping profession who can handle multiple clients, the industry accountants who understand departmental accounting, to me, it's the combination of all three of those that's actually going to make a kick-ass CAS team.
That's interesting. It's a
Okay,
bit
so
ironic. Yeah, I think having having someone who comes from an audit background explain client accounting when I think probably an accounts receivable or accounts payable clerk or a payroll officer would probably have a lot better idea of
Yeah,
how to provide, how to structure and provide
yeah,
that client accounting service, right, better
yeah.
than a 20-30 year CPA veteran. Right.
In my opinion, yes.
so even though CAS doesn't exist, if you had to define the acronym, what would it be?
I would call it client accounting service because cloud shouldn't
Very
be a
cool.
thing. And if you are, not that it shouldn't be a thing, that it shouldn't be a thing we call things now because everything should be in the cloud. So just wanted to clarify. And then advisory should be part of your client engagement. So again, these are not things that need to be called out. It's just accounting services for clients, client accounting service.
And I don't know if this is relevant for your clients, but is that a GAP or an IFRS system? I'm assuming it's IFRS since it's outside the US,
First,
right?
yeah. So we made the change back a few years ago, and so everything is pretty much you call it IFRS, I call it IFRS, but
Okay.
it's the same letters, IFRS. So yeah, but prior to that, everything was GAAP. So even in terms of like the cash, like cash versus accrual, all of that kind of thing. So in Canada, you could only file as cash basis if you were what was that? A commission earning individual, farm fishery, and I think that's it. And that's it. Everybody else had to file accrual basis. And so that's why, in Canada, something like Dext, where we need source documents or, auto entry, those kinds of things like are mandatory. You have to be using some of those tools within your business. And in the US, it's like, I can code off the bank feeds and all the Canadians go, what? No, you can't do that.
Yeah, I feel
So
like outside the Fortune 500, like the like big four level kind of accounting that we do down here, it's just cash basis. Who cares, you know?
yeah,
And so I think as far as like, to the point at which something, I've been in discussions recently about, it's kind of difficult in QuickBooks Online to do a lot of this accrual kind of accounting, right? That
yeah,
that is so optional for small businesses. In fact,
yeah,
I see a lot from VCFOs and business coaches and these types urging their clients to get used to using accrual accounting because they'll get a
right,
little bit better grasp on their business's financials, not for any sort of actual compliance reasons, just
right.
because it's better to understand the upcoming obligations and revenues of your business.
Yeah, for sure it is. And what was really funny, so first of all, if any of y'all have any questions about that, just talk to a Canadian accountant or bookkeeper because we've got it like nailed. We've got it down pat because almost all of our clients need it, right? But what I thought was so interesting about doing that session where we're talking about, what's considered complex in Canada and what's considered complex in the US, I had just as many people coming up to me after the session to go, oh my gosh, I will never take on a US client as thank you so much. I feel so much more confident about being able to serve a US client. And I'm like, I said we were all in the same room, people. So yeah, I guess what they took away from it was each a little different.
So changing gears a little bit,
Yeah.
you just bought a firm.
Yeah.
So what was that process like? How did you identify that particular firm to purchase? Like, what was the process like? What were some of the pain points? What were some of the awesome things? And how's it going so far?
Yeah. Oh, I appreciate that. Thanks so much, Chris. So first of all, I will say not that it's an accident, because obviously there were some very intentional steps along the way. But if you had asked me at the beginning of the year if I was planning on buying a firm this year, it would have been like a flat out no. So beginning of the year, I started out, my role at High Rock. And we had just finished. So I was working in acquisitions. We had just finished a couple of acquisitions with Megan Tarnow and her team out of Minneapolis and Jake Kimmelman and his team out of the Orlando area. And so I had some familiarity with that. I went on the LumiQ podcast with Michael Kravchik. They're just in Toronto here. I've known him for, 6 or 7 years. And so we talked a lot. I think the whole episode was about mergers and acquisitions because everybody's kind of into it right now. And a while later, like a few months later, so it was like May, he emails me with, hey, I've got a buddy who wants to sell a firm, but he wants to do it privately. Can you talk with him? Sure, no problem. And so we made an arrangement to call, and I ended up buying the firm. So how that all came to be was 2 years ago, there was a regulation change in Ontario where I live, where real estate agents could self-incorporate. So that's kind of like being so they call it a personal real estate corporation. So it is a C Corp. It's like doctors, lawyers here having professional corporations. So it's a similar thing. But previously, they could only file as self-employed, as a commission-only agent. And so everything that they earned, they had to declare and they had to pay taxes on. And so, I mean, when you're making over $1 million in real estate commissions in a year, you do not want to pay tax on that whole thing. So overall, it was a good thing because it meant that they could, leave a bunch of money in the corporation where it's taxed at a much lower rate, like 12.2% to start. And then I think it goes up to 15.5 at some point. So pretty low rate compared to the personal income tax rate. And, you've got this corporation that you run, you can pay yourself a salary or dividends or whatever. And so 2 years ago, when this all came out, a lot of bookkeepers and accountants were kind of going after the agents as clients to say, so now that you're incorporating, you should probably get, you've got some more compliance demands, we as accountants and bookkeepers can help you with that. And so that's what a lot of the push was on. But for me, I was thinking, with all of these changes happening with the agents, I wonder how much that would actually change their relationship with their broker. So you've got people starting to understand business structure in a way that they didn't used to. You've got people starting to understand or want transparency about the finances and what they're going to be getting as income, instead of just, being happy when a check rolled in kind of thing. And so I started to get really interested in what this actually meant for brokers. At the time, it was all desktop heavy, very admin heavy, very paperful. And so I came across this product called Loft 47. I kind of talked a friend of mine into letting me make him my guinea pig with his brokerage. So over the last 2 years, we had built this really nice full cloud, full paperless, end-to-end solution for brokers, which was basically unheard of because everybody uses all these desktop products. And so what was so interesting about it to me was this firm is focusing on real estate agents exclusively. So they have, over 200 clients, 85% of them are real estate agents. And for me, it was, look, I know there's a huge opportunity to start getting these brokers fully into the cloud with their accounting, as well as, because all of the marketing is all digital stuff, right? So the tools that they need to use, the apps that they use, those were all super current. And then they'd go and drop off a shoebox, to the brokerage to get reimbursed or whatever. And it was very incongruent to me. So anyway, so the first question I asked them was, well, why aren't you doing anything with brokerages? And they're like, because we really like to work in the cloud, and you can't work in the cloud with brokerages. Like, well, actually, you can. And I've been spending the last couple of years just kind of on the side for fun because I'm that big of a nerd, figuring it all out. And I think there's an opportunity here. So as the more we talked, the more they felt that it was kind of a no-brainer for me to do that. Around the same time, things were ending with High Rock. So the timing honestly could not have been more perfect. So yeah, that's kind of how that part came to be. What was the next part of your question, Grace? how are things going?
Just kind of like the purchase process and how
Yeah.
did that go, and what should other firm owners who might be listening to this think about in that sort of a process? So that's part of it. And then the other part of it is just coming into a firm that you just bought, being a new owner,
Yeah.
working with the team and onboarding yourself, basically. How's that process?
Yeah, no kidding. So first of all, I would say that I would probably have shied away from it as an opportunity if I had not have had the experience with acquisitions as I did at High Rock. So, sure, there were 2 that we closed, but there were others that we didn't. So I had gone down that road with other firms that we didn't end up closing on. And so I was very familiar with the process. So my banker and my lawyer were very happy with me on this one because I could anticipate what we would be needing and by when. I knew what the due diligence process looked like. I knew exactly what I needed from the buyer to make sure that I was making an informed decision on all of this. So honestly, it went much smoother than I ever could have anticipated. And I think part of that is because if I'm the buyer, I get to decide what's a deal breaker or not. So if I'm employed by a firm, for example, and there are things that I personally would not have liked or would have liked or whatever, ultimately it doesn't really matter because the decision is still in the hands of the shareholders who are actually going to be funding the acquisition, right? In this case, I could say what worked for me and what didn't. And so kind of cutting out the middleman. And so I think that made it a lot easier. I was able to just speak very frankly about how I thought this kind of should go down for both of us. And then trying to onboard myself. So first of all, I would say that the sellers are the most gracious sellers I think that I had ever experienced and worked with, just in terms of the access to the information. So I was, getting Go Proposal set up and taking a look at their their agreements and the way that they, mapped out all of that stuff. And part of the agreements are part of the due diligence anyway, but to kind of have carte blanche to go in and use the information, I was able to get a huge chunk of carbon kind of pre-set up so that it really gave us a head start in the implementation and in getting that up and running for the team, which was awesome. So just their ability, their freedom with the information. Of course, we got NDAs all over the place, but just having that trust in me that it's for good, I'll use my powers for good and not for evil, was really helpful. As for the onboarding myself, and now, of course, we just added a tax manager yesterday so the thing is that the two founders are the CPAs. So when they leave, my CPAs are gone like that. So we essentially needed to replace that level of expertise. So we were able to do that in Melanie Schroeder, which is, so it'll be amazing to work with her. But again, it comes down to, like, even last week we were talking about something and I'm talking about getting Uncat set up for a bunch of clients just because I'm ticked off at sending spreadsheets out all day. And, and just a few other little, tips and tricks and tools and stuff. And they're like, where were you 2 years ago? Like, why couldn't you have been part of this with us 2 years ago? Because I think that life would have been maybe a little easier for both of them. If, they were implementing some of these tools right from the very beginning. And I think that even as you talk to CPAs in terms of the tech they use or being all cloud or being paperless, even you can be paperless and you can be a full cloud firm without really having a cloud mindset. So yes, they used QBO. Yes, they used Dext. And then everything else is, in Dropbox or in Google Sheets or in Excel or something like that. But that was really it for their tech stack. And so to be
real quick, explain that. What does it mean to be full cloud without a cloud mindset?
Oh, how do I explain this? It felt like even though they were using cloud tools, so Dext and QBO, there was never the opportunity possibly for them to really take a look at, okay, now how do we optimize this? Or how do we automate this? Or how do we get, the information from this tax planner that I've got in a Google form over here? And how do we take some of those things that need to come in and be turned into tasks in Carbon over here? Right. And so, they weren't using Carbon, they were using Asana or something like that, but it just wasn't, I just don't think that knowledge was there.
So it's in the cloud, but not connected.
Yeah. Yeah.
Got it.
So that's what I refer to. Like, you're in the cloud, but you've got a desktop mindset. I've seen apps like this actually, where sure, I can log in from any browser, but the way that I'm using your tool or the way that you're anticipating that it sits in my workflow is that I still have a very desktop minded workflow where things are still segmented and not connected. And I just want the data to flow through, where it needs to go.
Very cool. Super great. I feel like I interrupted the whole onboarding process though.
Oh gosh, I'm just throwing tech now. Now I'm just like, so we got Zoom phone and they're like, how do, and then fellow.app to manage the agendas for our meetings, for continuous, meeting streams and stuff like that, which is super helpful. Now I'm just like, I feel like I'm testing their threshold for the amount of tech that they can take. But they have been, as I said, exceedingly gracious. In the announcement that we made to all the clients back on September 6th, we promised everybody, an opportunity to, meet me personally. So going through all of these 200 plus clients with 15-minute phone calls. Hey, I'm Rachel. But for each of those, one of the owner or the other, depending on who's been the lead on the client, even just in introducing me and kind of talking about our story and how we met, they've just been so kind and gracious. They probably did have other offers, from much larger firms who are, of course, super interested in the highly niche focus. And it really came down to look, guys, you've built a great foundation here. I'm the right person to take that foundation and continue building, whether it's with our brokerage workflow, whether it's, adding some additional automation to what you're already doing. I think a couple of the biggest pain points that I've seen with agents is cash flow and tax planning. So if we can really go after those two problems and solve them well, I don't think there's any end to what we're going to be able to do with this firm.
That's interesting. This entire story is interesting to me on a couple different levels because one, it's a bookkeeper taking over a CPA firm, right? Which really
Yeah.
flips around the model, right? Is the typical story is here's a CPA firm begrudgingly accepting, right, bookkeeping and CAS work into
Yep.
its tax and audit operations, right? And
Right.
this is the opposite, right? This is a CPA firm being acquired by a bookkeeper who's coming in with and leading with bookkeeping and CAS, right, to
Yeah.
produce the sort of tax outcomes that we know clients want. And on that note, you're doing this with a niche of real estate agents and brokers. I've worked with a few of them, several of them over the years,
Do you have any opinions
and
on that, Jeremy?
the only thing that gets them to listen is other than a new Grant Cardone's newest product, right? The only thing that gets them to listen is tax savings, right? And everything else is just some annoying facet of you're just being this wonky accountant, like just make it happen. I'm too busy closing the next transaction.
Yes.
Oh, and by the way, make sure I don't have to pay any taxes, right?
Yeah.
And so very early on, right after a couple of my first clients were realtors, and I learned very quickly that if I was going to be able to produce any of the results that they were hoping for, then the bookkeeping and we in the U.S. we have S corporations which require that the owners be put on payroll, right? Leading with the because there's no way I'm going to trust them to do their own payroll. There's no way I'm going to trust
Yep.
them to do their own bookkeeping, right? So if it
Yep.
was going to happen, it was going to be because I had to do it, which meant upselling them from the very start, right? So it wasn't easy, because then it's not just another $1,000 tax return at the end of the year, right? It's no, you're gonna be paying me hundreds of dollars a month every month.
Yeah.
But yeah, so I just love the way that not only are you flipping the model of the firm, but also flipping the model of how the firm is helping its clients, especially in that particular niche. So,
Yeah.
what is you said you're bringing on a tax manager, right? Because eventually these CPAs are going to go. So what is the future of this firm? So that's going to make it to where what does the rest of the firm look right now, and a year, 3 years, 5 years from now, where do you see that going?
Yeah. So great questions. And I've got a few thoughts on pretty much all of that. First of all, one thing that I noticed going in was that the bookkeeping and accounting part of the organization was really seen as a means to the end, which is getting your taxes done. It was not really seen as a valuable thing in itself. You could, the way they talked about it, the way they priced it, the way they worked with the team that did it, all of that kind of thing. So one of the first things that I did was I separated the tax team from the accounting team. Now, team is quite broad because what it means is that, generous. Melanie now has a tax associate reporting to her, and I now have a bookkeeper reporting to me. And yet they've been able to serve over 200 clients. So, with this model, especially sticking just to real estate agents and not brokers, it really is more of a quantity play, right? You've got a lot of clients at a very low price point, but it works. Again, it's a great foundation. They do a lot of financial education for brokers and for boards and stuff like that. So that was the first thing that I needed to do, was actually physically separate, how it was that work was going to be done. Now, the associate can concentrate on tax and learning tax. Melanie can focus on just reviewing tax and not really, having to get into financial statement preparation and such. And then for me, I've really been focusing with the bookkeeper on not only making sure that we're using the tools, but that we're optimizing them. So get your Dexter certification, get your QBO certification, learn all of the stuff that the product does. Now we're going to talk, once you've got those basics, and certification should not be the end product. It should be you've got the basics. Now let's build on that. On now, how do we actually optimize our workflow? How do we, use some tools that were never used in the firm because now we've got a bookkeeper that knows about it. So that was the first main thing, is doing that. Now what I see is, first of all, we're going to need to bring in a bookkeeping manager so that I can focus on the business in its entirety, and that both teams will continue to grow. So we've got lots of opportunities for growth, of course. There are 90,000 agents just in Ontario, many more across Canada, and then we're looking to expand into the US next year as well. So the opportunity for growth is massive because I think it's such an underserved niche because they can kind of be jerks, demanding, high maintenance. Anyway, I don't mean to name call, but there is fundamentally a lack of understanding of how these kinds of business, like the business of the business, works. There's, sure, you can sell a house. I could never do that, but I can balance your bank, and you could never do that. So, just to be able to lean on each other's strengths. So I do think that there are great agents out there that really do want to build solid businesses. And those, of course, are the agents that we want to be working with, and the brokers, that they work with as well. Those are the ones that we want to be working with. But yeah, I can definitely see how it would be troublesome. But then that's part of my job, is to make what I'm doing applicable to decisions that they make every day. And it's by doing things like making sure they understand their cash flow because of the transparency of their income, which is very, very little. That's a major problem. In one of the largest brokers in the area, they have over 700 agents. Over 400 of them are getting their income garnished from the government for taxes. Like, this is how completely delinquent and financially illiterate. I feel like I'm using harsh words, but it's a problem.
Well, and I see a very similar thing. Yeah, I see a very similar thing for the agents that I've I've gone to a couple brokerages and spoken to them. I've worked with a bunch of them, and they really fall into three buckets, right? The first bucket is the ones that it's a side gig maybe, and so they just aren't really that active. They might do a couple of transactions for some friends and relatives, a year or something, but it's not really worth doing much about. There's the ones like you're describing, where they just continue to operate in this almost state of denial, right? Year after year, that it's just rushing to get the tax return done by the extended deadline. And then they never actually pay anything because they just act like they shouldn't, or they think they shouldn't. And so the tax debt just continues to pile up, right? And then there are the ones that, and they're the diamonds in the rough, right? They're the ones who take it seriously. They're the ones who treat it, like you said, like a business, right? And so they're more amenable to letting, their accountant, their tax advisor, whoever it is, sort of build the trappings of a business around them, like the bookkeeping, the payroll, the tax planning, right? And so, if you can find those diamonds in the rough that are willing to buy into actually operating a little bit like a business, and then you can make it easy for them, right? You can make it to where they don't have to worry about it. Then yeah, you can help them. And then, I had to just learn that, like, the ones that needed the help the most, that were 3, 4, 5 years behind on their taxes, they were just, I can't change them, right? It's that saying that I'm starting to hear a lot more on tax, whatever. I can't care more than they do, right? And those you got to kind of learn to weed out, right, from those diamonds in the rough. So
and even then, I mean, there are people that have unfortunately they just didn't know. They truly just did not know. They're kind of doing what the other team members at the brokerage are doing, and they're incorporating when everyone else tells them to incorporate, even though it's way too early and it's not going to be of any benefit, and that's actually going to cost
that was
money.
Another thing I was going to say, right, is that 99% of realtors, their tax advisor is their broker, or the senior agents in their brokerage, right, that are the first people when they became an agent started telling, oh buddy, you gotta go get an LLC, you gotta go get an S corporation, right, it'll save you all your taxes. And then and then years later they finally actually go talk to a real tax advisor.
Yeah. So, I mean, this was what I was going to say about, when you've got somebody with delinquent taxes like that, in some cases, they just didn't know any better. In some cases, they won't ever know better. And in other cases, they are desperate for the help and they want to feel better about it. A lead came in, he's 37 years old. He's been working in real estate for a number of years. He said, but his debt so his income has never been higher. His debt has never been higher. He feels like he isn't even yet, after many years in the industry, able to actually enjoy the wealth that he's building. So one of the things actually that I got connected with pretty early on, financial planner, his name is Jarrett Holmes out of Winnipeg, actually. He also focuses on real estate agents and brokers as a financial planner because of the need that he's seeing. And we just connect so well in terms of the huge need that there is out there, and that it does need fixing, and that there are agents out there who want it fixed, and how can we serve them. And so we've started to build up a really great partnership around, financial literacy, and around having these conversations with clients and referring clients back and forth, to make sure that we're taking care of not only the business requirements and compliance, but actually that they've got something left over, to save and to invest and stuff like that as well. I do want to touch a little bit on what you were talking about when it comes to CPAs and bookkeepers. Because interestingly, there is a difference. See, going back to my 90-minute session, there is a difference in the way that Canadians, in my opinion, and Americans view kind of that CPA versus bookkeeper relationship. I think that one thing that has definitely helped is that Canada has, as I mentioned, CPB Canada. So it is an educational track that goes along with, multiple college courses that you're required to take. There are multiple levels to it. The CPA used to have something where you were first level, second level, associate CPA, etc. And then you basically take your entrance exam, and then you need 2 years work practical experience. So there is a solid bookkeeping program and standard and regulator, I guess, industry regulator here in Canada. It is not yet official, it's not recognized by the government quite yet, but a lot of this work has to be done before it can be, right? So that, we have over 2,000 CPBs, but, they wanted to see 5,000 or 10,000 before they can call it, a proper professional designation, whatever. So at least we've got the desire and we've got the organization to actually help make that happen. I have seen similar organizations in the US, but they don't seem to be as unified, maybe, or it still seems to mean something different. So with ICB US, it feels like they've tried a few times to kind of get that up and running. And then there's AIPB, which I'm not totally sure what they do. Then, of course, there's bookkeepers.com, where you've got Ben that comes in and, he actually does a fantastic job at educating, but the marketing is no experience, be a bookkeeper. So that is what gets widely, communicated. And of course, every CPB has seen terrible, terrible bookkeeping. But where I think, Canada, besides having this organization, CPA, we work in accounting firms and we work side by side with the CPAs. And so to me, my knowledge of the industry and my knowledge about technology and about accounting and all of the things and how we could, serve agents and brokers was much more important to the sellers than whether or not I was a CPA. So again, I just think it's one of those differences.
Yeah, and that's why I think it's interesting because this is one of those times in the U.S. where we are 50 different jurisdictions because each state regulates the CPA license differently, right? And so there's a lot of overlap, but you can have some relatively significant differences from state to state. So, for example, Texas is known as one of the strictest states, and for a few different reasons, right? In terms of the qualifications, but also in terms of things like who can own a CPA firm, right? There's slight differences across different states, and the rules are different everywhere. And I don't pretend to know all of them, but I know there are some states where a certain percentage has to be owned by actual licensed CPAs and these kinds of things. So yeah, I think that's another aspect of the story that's interesting. That just the notion of a non CPA buying a CPA firm just kind of, in some states, right, that would be problematic, right, in the
Yeah.
U.S.
So I will clarify that they did have to deregister it in order for me to buy it. So it was a professional corporation. As a non-CPA, I can't own shares in a professional corporation because I'm not a CPA. And so they needed to deregister it. So we had to have the conversation, like, is it important to you that this business you've built stays CPA? Well, the reason why they were selling is because they were both getting out of firm life. They had it. They, with the tax deadlines and, with the work and with dealing with, the CPA organizations. So they were getting out anyway.
And that's a big conversation across the industry, especially in the U.S., right? Is, does your firm actually need to have the word, the initial CPA in it, right? Is that really going to have a difference on the kind of business you're doing, the clients you're working with, all these kinds of things?
Yeah. So in my case, hiring a tax manager who is a CPA, so she will most likely, as long as she wants to stay a CPA, she will most likely need to maintain a professional corporation for herself. But there is no restriction on her actually working for me. Where there is a restriction is if, for example, one of our team members wants to be a CPA, they won't be able to get their audit and assurance work hours with us because we don't do it. We do tax and accounting and advisory. And so they would need to we would have to work something out, like a loan to another firm or something like that to get that expertise. But you can work around everything.
Yeah. What about on the tax side? Is there a required tax licensure to do professional tax work in Canada? Because in the U.S. there's not.
No, there isn't. So, and we don't even have an EA. So in the US, you have an EA, which I actually really like because
yeah, I do too.
Well, yeah, you have it. But to me, there is, again, a governing body or certain requirements in order to complete certain tasks. In Canada, sure, yeah, anybody can do taxes, but it also means the bookkeepers aren't restricted. They're like, if I'm working with this client all year, I don't want to have to hand off my tax return because I know their business the best and I'll be able to get it done no problem. So there isn't that restriction. Where I said that there is that, if as long as Melanie wants to keep her CPA, it's more on kind of like the compilations, those kinds of things. But there are also ways to partner with firms to get those kinds of things done. So if we're not doing audit and assurance, then there wouldn't really be a reason to have to be registered anyway.
So how much of the firm when you took it over was bookkeeping versus tax versus advisory? And then what do you imagine that split is going to be as you grow it?
That is a great question. So I would probably say, so of the advisory would be focused almost exclusively around tax planning. There wouldn't really be any advisory that wasn't related to tax planning. And then in terms of kind of the way the engagements are laid out with, the revenue portions, I would say probably 10 to 15% bookkeeping, accounting, and the rest tax. Like, it was very tax heavy. So I want to get it 50-50. At least I want to make sure that, first of all, that we're working with growing organizations and people who are working with growing teams. It's funny, as an industry, looking at kind of a small business segment, the majority of these agents are essentially solopreneurs. They don't need things that one would think small businesses need because it's just them. And so it's kind of, what is that balance between, or what's that sweet spot of clients that need and would value, a larger bookkeeping, accounting, and advisory engagement throughout the year so that we can do tax planning as we go, so that, the tax is just a deliverable at that point and not the be all of the engagement.
So what do you imagine your gatekeeping / sales / marketing process is going to be as you onboard some of these clients who are looking for more of the advisory type work? So how are you going to weed out the clients who are a fit, not a good fit? And then how are you looking to market that?
Great question. Honestly, this is why I'm working with BizInc right now, is to help me with a bunch of this stuff. So because I can talk about how I want to be seen in the market and all of that stuff. What I need their help with is how is it going to resonate with agents, right? How can I put the way that I want to work in such a way that agents want to work with me when, as you said, Jeremy, the only thing they're really concerned about is lowering their tax bill. Well, that's not that it's not a concern of mine, but that's not where I see the highest value in the engagement, right? So how can we communicate that? So working with that team, I think, is going to be a huge benefit. I'm excited to see the first drafts of my new website that's coming next week, where we can start to change the conversation. Because today, if you looked at realtytax.ca, it's all about incorporating, it's all about getting your taxes done. And so for me, it's about starting to change the conversation and starting to change that. Now, we probably won't ever not have Realty Tax as our name because it's catchy. It's short, from a branding perspective, it's still a solid, SEO play. But I just need to really work on that messaging. And then talking about, where clients are a good fit and a bad fit, definitely the ones that are more tech savvy. So where I've got somebody emailing me to say, call me,
not a fit.
Probably not an A client. There's probably a conversation we need to have about that. If you would prefer me to send you a spreadsheet every month and you're not at all interested in seeing, what UNCAT is about or how it can make things easier for you, probably not an A client, right? So there's other ways to kind of figure that out. Again, I think this goes back to, if you focus on real estate agents, you should just take on all real estate agents. But there is value in working with people when you're aligned with them. And so those typically come out in conversation pretty clearly, pretty early on.
For sure. So for those of us who don't know, what is Biz Inc. and how does that organization fit into your process?
Sure. So Biz Inc. actually does marketing and websites for accounting professionals. So they've just been Matt Wilkinson out of New Zealand. We've been connected for a while, but finally being able to actually work together. In fact, we have a webinar coming up tomorrow with Blake Oliver. Sorry, October 19th. I'm not sure when you post these things. With Blake Oliver.
This will be in the past, but that's okay.
Sorry.
Yeah. Will there be a recording?
You would have missed it. I'm sure there's a recording, or I'm sure that Blake will get it out for people to hear, where we're actually talking about marketing in terms of your recruiting funnel. So recruiting and retention and marketing strategies for recruiting and retention. So that should be really great. But all of their material, all of the stuff that they do is all about marketing specifically with accounting firms. And so we know the value of niching, right? So they're doing a really great job of it.
Speaking of Blake Oliver, a quick announcement to the audience. Our first episode is available as on Earmark as eligible for CPE credit. It's our interview with Logan Graff. So go check that out if you haven't already and get yourself some CPE credit. We're hoping to have many more episodes on Earmark eligible for CPE. For sure. But so what made me reach out to you to invite you on here? I've known of you. I think we've interacted on Twitter, as you said, tax Twitter for probably a couple of years now at least. But what made me reach out to you was seeing a little while back you were on an episode of Earmark that I was actually, it was live streamed. I tuned into the live stream of it on quality management in a firm. Yeah. So, we talked a lot in this episode about you acquiring this firm, coming in. Now you're thinking about adding staff now. And not just that, but on top of that, you're changing processes. You're thinking about how to change the firm's processes, even your clients' processes. Just, in the last few minutes here, what is, and I don't want to duplicate too much of what you were talking about on that episode, because I want people to go listen to that, obviously. But just real quick, what's the gist of quality management? What's your take on quality management for those that are solo firm owners that are thinking about expanding, that are thinking about adding on staff, or maybe just have a couple of offshore, bookkeepers working for them, but they want to, actually have more staff in their firm. What is quality management? What can get these firm owners, these small firm owners, over the hump of starting to increase the size of their staffs?
First of all, I will say, because I didn't talk a lot about kind of my history, but back about like 10, 11 years ago, I started Fisch Books. So that's where my Twitter handle comes from, is actually my bookkeeping firm the first time around. And I had that for about 5 years. And I felt like I grew, again, kind of accidentally. I just needed clients. I'm going to take on everybody. I'm going to work with whatever they work with, all of the classic mistakes, because at that time I just needed income and I needed as much income as quickly as possible. And I just need to start taking on clients. And so part of it when going through this firm piece was, oh my gosh, did I just like spend the last 6 years of my professional life to come right back to the same place that I was like 11 or 12 years ago? And to me, it was, so yes, I have about that same size firm again. Yes, we're kind of starting from scratch, although there's a little bit of a foundation there. But for me, it was, but what are all the things that I would do if I could do it all over again? And with all of the technology that has come out within the last 6 years, and with all of the experience and all other things that I've done, like my Deloitte time, my Sage time, my High Rock time was all on those 6 years. So with all of those behind me, now what does this look like? And so kind of the number one thing is, you have to, if you are going to scale, it needs to be very intentional. I talked about doing a lot of things by accident. You can't scale well by accident. It needs to be extremely intentional. And I know that one of the things, the areas that I feel not a lot of accountants take a look at until kind of, okay, our whole tech stack is in place. Now let's figure out how to get everybody on the same page, like as bookkeepers or whatever. Or now let's tackle why our tax returns at the end of the year are such a disaster because the bookkeeping is horrible. Or now let's take a look at this thing. And by that time, there has been so much time and skills wasted in getting work done, where if you knew what the same page looked like at the very beginning, it would be a lot easier to scale. So that was actually the title of the session. It was also with John Ray of Scrutinize. It's talked about client quality management and scaling your firm. And so we also talked about quality management as being kind of the overarching concept of quality management. It's the strategy within your firm. Within that is quality assurance. So that is the peace of mind that the client gets from knowing that quality management is a concern of yours and a strategy of yours. And then there's quality control. That is, what are the processes and the tools that you have in place to make sure that you are setting a certain standard and then meeting it. And so, we talk about quality management as a whole strategy, but there are a few parts to it. And so, yeah, that's when I connected with John, and we've been working together a little bit. But that to me is whether it's Scrutinize, whether it's Keeper, whether it's auto review, whatever you're doing, how are you defining what your standard, what is by standard acceptable to you in terms of errors or whatever, and then what is the process to go through that? So yeah, it was actually a great discussion. So thank you for joining. I appreciate that.
Well, yeah, and I think that's an interesting point there to kind of trail off on, because obviously as accountants we want the books to be perfect, and we want everything to be just right for ourselves and our clients. But then obviously that's impractical, especially as we start to grow. And so if there's one thing we accountants know about, is materiality. And so where within your own firm and within your own staff do you draw the line between maybe you don't need a staff person spending 2 hours fixing 1,000 transactions that are all less than $25 in the books for last month's close, right? You just kind of need to roll that up into a little bit of a write-off and then just move on, right? Versus this is a 5, 10, $25,000 transaction. Let's sit down and spend 20 minutes discussing like what how are we really going to treat this, right? And so it's things that, until you've been doing this for several years, right, don't just automatically click. And so how do you bring on new staff and get them in a place where they can start making those decisions themselves without it becoming something that always winds up back on the partners or the owner's desk?
Yeah, but even then, it's usually months after the year's been completed by the time it gets on somebody's desk. So instead, let's catch it, the day, the week, the month it happens, and let's get those things addressed, within the regular bookkeeping review process so that by the time it gets to tax, it's clean, right? And that everybody can be confident in the work that's been done. It should also mean that your tax returns have a much higher margin because you're not spending time going and cleaning stuff up. So it really does benefit the firm all the way around, to have a really solid quality management process in
And the
place.
client as well, because they're not dealing with the
Absolutely.
stress of all this cleanup happening in March or April when it could have been done back
Yeah.
in June when the transaction actually
And they're
happened,
like, but I've
right?
been
Yeah.
paying you for that. Why do you need to clean anything up? It should be done, right?
So how do you market and sell total quality? Because and
Not,
here's why. So let me ask it a little bit better,
yeah,
and let me explain why I'm asking a little bit better. Because the client expects that anyway, right? They expect it to be 100% accurate.
right.
So it isn't doesn't it come with the expectation, or is it something that we should be selling in addition to what we're already selling, which is the relationship and the outcomes, which are or the products, which are tax returns and things like that?
Sure. So, first of all, I would say that no client or team member is ever going to come to you and ask you for, I think we need to put a quality management system in place, right? That's not ever going to be the thing. Um, but in that session, we often used the analogy of a Model T, right? Where Ford was the first one to really take what was a custom build for each vehicle into how do we scale this, right? We need an assembly line. We need people that are only doing certain jobs, and we need to move the vehicle through this assembly line so that we've got a finished product. So when you think of it in terms of vehicle, even though your seatbelt could be considered your quality control, right? You're not going to sell the seatbelt. You're going to sell the assurance of the seatbelt. You're going to sell safety. You're going to sell, feeling secure in your vehicle. So in this case, I don't think that there's anything that you would be selling that isn't already in your marketing terminology in terms of peace of mind, in terms of, compliance requirements being set. Don't worry about it. We've got your back. All of those kinds of things. I think that right now it's being said, but it's not being done. And so by putting a process in place, it does the things that you say, by, again, catching those errors a lot earlier, getting everybody on the same page, having, systemized processes to make sure that you're working on every client the same way, that everything is as important as it should be to everybody else. So I don't think that that is in itself something that you market or sell. Is that a total cop-out answer?
Kind of, sort of. No, not really. So would you say to a client or a potential client, like, yeah, everything's going to be right, it's going to be accurate, it's going to be timely, and all that stuff, and we know you hear that from everywhere, but here is our process to make sure that that actually happens?
Right, because what you're selling is the assurance. You aren't selling and to demonstrate that assurance, let's talk about our quality controls a little bit so that you have that peace of mind. But I'm not going to sell you on our tax returns are going to be done the fastest and the no errors. No, they are expecting that they will be on time and error free. But here's how we're going to demonstrate that to you.
Very cool. So how do you think about your quality management? How do you think about your quality management from an error rate and what is acceptable and not acceptable in materiality? And how would you recommend other firm owners think about that as well?
Yeah, great question. So, first of all, I would say that for us, it is very much a work in progress. Again, because this isn't something that was done previously. So, I mean, at this point, I'm just working on let's just make sure that our general bookkeeping processes, right, that we're publishing from Dex, that we're reconciling the bank, all of those things. And then, yes, we can start to put metrics in place in terms of, when can we get bank recs done, or how many uncategorized transactions do we have? So I think it's best to really start with a goal in mind, and whether that's time-based, whether that's error-based, whether that's, or an error threshold, whatever, and then work back to, okay, now how are we going to achieve that? And then just continue to tighten up those Great, we got our closes down to 12 days. Let's get them down to 10. Great, let's get them down to 7, right? And just continue to refine and refine. And there may be some things that are out of your control. You're never going to have, 100% error free. You're never going to have same day bank recs. But there are some things that that you can improve on and that you can measure going forward for sure.
Yeah, that's absolutely great advice. So, Jeremy, we are just about out of time. This has been a very far ranging conversation for sure. So, give us some of your key takeaways, number one. And then number two, we've got a review to read from a listener.
Ooh.
Yeah, I know, right?
Wow. Yeah, I love that last bit there on the quality management piece. And again, if you haven't seen that episode on Airmark, go check it out. Also, while you're in the Airmark app, go check out our interview with Logan Graff if you haven't heard that one already.
Nice plug.
Working on it, man. Working on it. But yeah, absolutely. No, Rachel, thank you so much. I like Chris said, this has been far reaching. I think there's a ton here for those, especially that are just starting a small firm or have just acquired a small firm, to think about, where is that firm in terms of, where it is and where do you want it to be? As a small firm owner, I'm on a bunch of listservs that send me firms that are for sale, and I'm always just sort of on the verge of finding one that maybe looks acquirable, and then I just freeze up because it just seems so hard to, I always feel like maybe I could just do this organically, or maybe there would be too much resistance, or just for whatever reason it would just be, it just kind of leads me to not consider it. But this story that you've shared with us actually, gives me a little bit of faith that maybe it's possible to find a firm where there is some fit, even if the processes aren't all there, even if the niche is a little bit different from what you're used to, and maybe you can come in and not start from scratch, but actually have a little bit of a base there to build the firm that potentially you want to build on there.
Yeah. And I was just going to say that organic growth is always cheapest. So although I appreciate you being inspired by my story, organic growth is still recommended. I think what also helped, though, was that I wasn't trying to merge two firms. I was, leaving one firm, coming to another firm. And I think that made a huge difference, too, because I wasn't trying to, smash together people and systems and stuff like that. But yeah, every deal is different.
I've talked to firm owners who just went through an acquisition where the staff are having to learn two different tax softwares because they use one and the firm they just acquired used a different one. And it's, they're coming up on tax season and they don't have time to transition all the data to one system or the other. And so, yeah, it just seems like, really easily, really quickly, you could just kind of lose control of the whole of both firms, right? If you're not very intentional and you've got a good plan in place to do it. But and so again, whether you're merging your firm with another one or whether that's your path to acquiring the firm that you want without having to build it from scratch, I think that's a great story and a great model to think about implementing for yourself.
Great, thanks,
Chris. Our review.
Yeah, let's do it. So this comes from Rebecca Kwasnick, and hopefully I didn't butcher that. And if I did, I'm so sorry, because this is a great review. And it says, extremely relatable for a small firm owner. That's got an exclamation point, Jeremy, right there.
Nice.
I haven't found many CPA firm owners with a similar business model to my firm until listening to this podcast. It's encouraging to hear about your success providing CAS and tax services to your clients. Thank you for providing detailed examples of problems you've already solved in your firm, like we did today with Rachel. I left the episode with several ideas on how to improve my own firm. Thank you, and keep producing great content. Rebecca, we very greatly appreciate that review. Yeah. And any of our listeners out there, if you've got a review, by all means, go ahead and post it out there on your favorite podcast app, and we will read it on air.
Very cool.
So, Rachel, thank you so much for joining us today. It was a great episode. A lot of great content in there. I've got notes. See that?
Thanks,
but thank you so much for being on the show.
My pleasure, and thank you too, Jeremy.
Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.